Is the market shift in the Warner Robins housing market going to cost you thousands? If you decide to wait another 30 days to sell your house, is it going to cost you more than it's worth? So in this video, we're going to show you what's really going on in the Warner Robins housing market, why sellers are missing the signs, and how you can protect yourself from chasing the market all the way to the bottom. So let's get into it. Hey guys, I'm Chris, your real estate problem solver in Middle Georgia. I've been a real estate investor and an agent for over 20 years in the Middle Georgia area. That means Warner Robins, Kathleen, and Bon Air. So if you have any questions about the real estate market, which after this video you're probably going to, reach out to me. My information is in the description below. So if you haven't been paying attention, the real estate market is starting to show some signs of shifting in the air. Listings are staying on the market longer, days on market are stretching out, buyers are starting to pull back, and sellers that are not adjusting accordingly with the market are missing out on getting their house sold. So before you list your house, let's go over a few numbers so you can be better educated on the housing market right now, so you can make a better decision on what to do and how to do it, and how to position your house to get sold rather than staying 6 or 8 months on the market. All right, you Warner Robins house sellers, here are the market trends for the Warner Robins area as it stands right now. Now, on one good hand, the number of listings that are going on the market has dropped back in the last 30 days like 14-15%. That means there's not quite as much competition coming on the market. Yay, good for you. But here's the caveat. The number of days on market has jumped up 12%, which means we're going from about 30 days on market to 38 days on market. This has been the trend for the last couple months. The number of days on market to sell your house has been increasing, so just be aware of that. Also, in conjunction with that, the number of price reductions has increased by 21%. That means 20% of all the houses on the market have decided to cut their prices to get their house sold. So there's more price reductions, longer days on market, and the number of new houses coming on the market has slowed down. Well, that's a mix of good and bad, so let's translate this a little bit. Even though there are fewer houses going on the market, which means you've got less competition as a house seller, yay for you, but buyers are pulling back. They're either not getting qualified for the loan, or they're holding off a little bit longer to see if the interest rates go down to lock them in. Whatever the reason is, they're taking a little bit longer to sign on the dotted line. And in doing so, people that have been selling their house for 30, 45, 50, 60 days have decided to start cutting their prices, reducing their prices in order to get the house sold. So next, we're going to talk about what you can do as a house seller in Warner Robins to make sure you don't stay on the market too long and follow the market to wherever it may go. All right, so you're selling your house in Warner Robins. Next thing is to figure out what the market is telling us, so you make sure that you're not testing the market 6-8 months after you put it on the market. So first and foremost, how many houses are in your neighborhood that are just like yours that are on the market? You need to drive around. Find out if there's any other houses in your neighborhood that are similar to yours. Include new constructions. I know a couple of you are sitting in brand new neighborhoods that are still being constructed, and those houses count. Even though you bought yours 2 years ago, it doesn't matter. It's still a competitive house. So what are they selling for, and what are they on the market for? Because the two things that you need to be able to compare to is what is recently sold here in the last 2-3 months and what is on the market right now. Because these are the ones that you're going to be competing with. You need to be cleaner, nicer, and more luxurious than the other guys. So people are going to look at your house and call it a bargain and put their name on the dotted line. Cool? Cool. All right. So now that you know what else is out there available that is similar to you in the same neighborhood, drive around and find similar models in the same area. If you're in Bon Air and if you're in Kathleen, it doesn't matter. The builders that built your house, I don't care if you're in Somerset, I don't care if you're in the Woodlands, I don't care if you're in Southland Station. Those houses were built by one builder, and I guarantee you those builders built another neighborhood, another subdivision somewhere else. Go find those houses and see what they're selling for. Any house that's similar to yours, you need to be aware of what they're selling for. The only difference would be in that case, location, location, location. So with that being said, if another house is selling for more and it's just like yours, but it's closer to Robins Air Force Base, then that's probably the reason. So you can adjust for that. So this way, what you're doing is you're comparing everybody else so you know fair market value, okay? We're not looking down to a pinpoint accurate to the penny number, but we are looking for a realistic, honest range of what your house is worth. Now, with the market, the days on market are getting longer, buyers are pulling back. That means you're going to have to, whether you like it or not, for better or for worse, you're going to have to market your house more competitively. Yes, i.e., lower your price. So if you've got a house that you've got on the market for $500,000 and your neighbors or other subdivisions that are similar to yours are on the market for $450,000, guess who's going to get sold first? Not you. Okay, so this is where you're going to have to read the indications. People are taking longer to buy houses, and again, people are already that on the market and testing the market for you are telling you that buyers and sellers are coming together and agreeing to a lower price. So unless you want to sit around and twiddle your thumbs for the next 6 months, it would probably be best to go ahead and pay attention to those indicators and undercut them now. Because let's do some numbers. You want the most money out of your house. That's obvious. But if you want the most money out of your house now and it doesn't sell, and then the market goes down next month, you want the most money out of your house then and it doesn't sell, and then it goes down again, guess what? Let's take, for example, a $200,000 house at 1%. What's that? $2,000? Yeah. Next month it goes down another 1%. You just lost another $2,000. How long are you going to keep doing this before you're going to get ahead of the curve and go ahead and price it competitively in this month so you don't end up trying to sell your house in this month? So go ahead and get the job done now, price to compete, get the house sold, and move on to the next chapter of your life. Losing a few $1,000s now in 1 month is a whole lot better than losing $6,000 in month 3. Not saying that I can tell the future of what the market's going to do, but the Warner Robins housing market is in a teeter-totter right now. It's bouncing up, it's bouncing down, but there are indications of a balanced market turning more buyer's market. So just be aware of that. I hope this information helps you in some way. If you need any help or if you have any questions, make sure to reach out to me. Again, my information is in the description below, and I'll talk to you on the next video.